Good morning. Just want to send across my weekly market update for the week of April 20th through April 24th. So starting with the macro headlines, big picture here. So according to Realtor.com, we are in peak listing season right now. So Realtor.com says that this week is the best week to list your home in 2026, according to obviously previous years and previous markets. However, the market is tracking kind of closely to last year with no major breakout expected. Inventory growth has nearly stalled. Buyer demand is slightly softer, and rates remain kind of elevated compared to obviously pre-pandemic levels. Bottom line, the market is stable but slow. Sellers have a little bit more leverage in most areas, but realistic pricing and preparation matter more than ever right now. So kind of looking at inventory and housing supply, inventory growth is nearly flat compared to this time last year. Year over year inventory is only up about 3%, down sharply 30% growth at the same time last year. So new listings came in around 70,000 this week. This is below 76,000 of the previous year and below normal range of 80 to 100,000 we have seen in previous years. So we may see even more inventory come up, but soon inventory may go negative, and meaning kind of fewer homes on the market than it was this time last year. So takeaway, sellers are not rushing to the market. There is no kind of flood of distressed listings coming as we have seen in previous years. So kind of what does that mean for kind of buyer demand and sales activity? So pending home sales, approximately 68,000 to 69,000 this week. Is down from 71 to 72 from last year. So we are seeing a little bit less pending home sales this year than we did in 2025. Mortgage purchase applications are down 3% compared to the same week year over year, over a year ago. Nearly 1 in 13 active shoppers are also browsing rentals. So they're kind of weighing their odds of renting versus buying, and indicating hesitation in higher cost markets. Existing home sales for March came in around about 3.98 million, just under 4 million, and down 1% year over year. So the takeaway here, buyers are active, but they're kind of cautious right now. Those in lower cost markets are still moving. Higher cost markets are seeing a little bit of more hesitation. And last thing, a couple of things on home prices. So median existing home prices right now are 408,800. This is up 1.4% year over year. Home prices are risen year over year, around about 33 consecutive months now. About 34% of active listings have cut their price in line with kind of historical norms, and nearly identical what it was like last year. So only 8% of sellers say they are listing because they can no longer afford their home. So there's no wave of forced sales. So that's maybe another reason why we aren't seeing an influx of listings come to the market. So takeaway, prices remain stable. A crash is not in the data. Sellers have kind of equity and kind of patience on their side of things. So we aren't seeing as much listings as we have in past years. So now looking at the economy, what does this mean for you? So obviously the CPI inflation came in at 3.3% year over year in March, above the 2% target, but in line with expectations. Energy prices are kind of the main driver of that. Obviously what's going on in Iran, in that Middle East area, is affecting it as well. So for those of you who don't know what CPI means, it means the Consumer Price Index. And as you can see here in this graph here, in March, it did kind of peak up a little bit to 0.9. The Fed is expected to hold rates steady as they are meeting on April 28th. Weekly unemployment claims around about 207,000, down from the prior week. The job market kind of remains stable at the moment. Builder confidence fell to 34 in April, near its lowest level in 40 years outside of the 2008 crisis. What this means for buyers, new construction is one of the best opportunities right now. Builders are cutting their prices and offering kind of buy downs and kind of credits, especially, for example, Houston related. If you're looking at a new construction of townhome development, they have really been struggling in the past year or so. So if you're kind of looking to get a good deal and with buy down rates and credits, now may be the time to do so. For sellers, price it right. Obviously, lead with value and be ready to offer concessions if the market kind of asks for it. The sellers who win right now are the ones who are prepared, not the ones who are waiting for the perfect moment. Next thing with rate and affordability. So we are seeing the 30-year fix right now hit 6.64 at the end of March, which is a high for 2026 so far. Just 5 weeks ago, we were below 5.98%. That swing definitely can affect buyers significantly when they're purchasing a home on their monthly rate. By Wednesday, April 1st, rates dropped to 6.47 after the Fed Chairman Powell signaled stability with no hikes or cuts. The 10-year Treasury is trending lower, a positive early signal for the rates may kind of ease further. 7 out of 10 U.S. counties are considered unaffordable by standard of debt-to-income measures. More affordability equals major markets such as Houston, Dallas, Chicago, San Antonio, and Philadelphia. So the job market is solid with unemployment near historic lows, which means the Fed is not under pressure to cut any rates anytime soon. The last thing is going to want to give you a quick snapshot of what the market is looking like today. So 30-year right now is at 6.33%. So it is up from 1 day ago and a little bit up from last week. And then the 15-year FHA, Jumbo, and ARM and VA as well. But other than that, obviously, if you guys want a little snapshot of your local market and your local neighborhood, feel free to kind of give me a private message. Happy to do so and dive deeper into the data. But anyway, have a good rest of your week, and I'll be in touch soon.